We're going to talk about Jerome Papa Powell, what the Federal Reserve said at this meeting, and what they didn't say, and why Christmas came early. Okay, my friend, I was out running around with my wife for our anniversary, and then I get the text message from you and a bunch of other homies, and they're like, did you see what Jerome Powell said? And once again, I'm like, crap, no, I didn't. I don't know what's happening. So give me your thoughts, and then I'll give you mine.
Well, my first thought is that's another shirt we have to make. Papa Powell. Okay, never heard that before, okay, because he is like top dog when it comes to the financial world. So what happened was the Federal Reserve had their normal meeting like they always do. Jerome Powell came out and did his press conference. I didn't actually watch the whole thing. I just watched little snippets and saw the reaction, both just commentary as well as the market. So that includes financials, mortgage rates, stock market, not really crypto, but basically he said we're about done and we potentially will lower rates 3 times next year. And he was feeling like he was taking an early mini victory lap. Now he didn't actually say it, right? And he did mention something that I think was a big takeaway. We can't wait for 2% inflation because by that time it would be too late. I didn't even have to watch what he said physically. I just knew that if he's making that comment, that's a big deal not only for him to say it, that's a big deal for people to hear it. And so to clarify what he's talking about, to give some context, 2% is the normal inflation rate our economy should have based off of economists all over. We went all the way to 9%, which is a huge problem. That means your milk is 10% more expensive a year now. It's from a year ago. We're finally getting closer to whatever 3 or 4%. But the question is, are we going to wait till 2% to lower interest rates? And he made that statement. That's what I got out of it. And the reaction was very positive. So stocks went up.
Yes.
Mortgage rates went down.
Yes.
That's a big deal for real estate. And then I think third, people just had like the end of the tunnel type of feeling, like they can see the light.
Yes. Lynn, anything to add on the Federal Reserve?
Nope. No, I just hope we come back down so that people can afford to buy houses.
Okay. You nailed it. And so we're 1,000% in sync. They didn't raise. They indicated 3 potential rate cuts for 2024 and that they can cut and will cut before inflation hits 2%. I think that was the biggest takeaway there, is that the Federal Reserve is intending to cut rates before we hit their 2% long-term target, which means rates are going down. So if you go back and listen to the podcast that's just about interest rates, I actually think it's almost slightly outdated today. I think we'll hit a 0.5 point, and one of my other friends, Nick, sent me a message and he thinks a whole point lower. I'm not that optimistic because of this.
Just in mortgage rates in general?
Mortgage rates in general.
Wow.
So the predictions from everyone, remember, was mid-6s was the general prediction for 2024. Now I would say we're low 6s by the end of 2024, maybe even into the upper 5s. My friend Nick was saying, man, I feel like mid-5s are a possibility. Let's review this and just kind of think about this for interest rates and real estate for a second. We've seen peak fear. We've seen peak interest rates. We've seen the bottom in demand for the number of transactions. Transactions are in the Seattle Metro right now are at 2011 levels of deals happening. So in other words, if you survive, this is the bottom. It means deals are going to dry up. So when we've been telling people, if you haven't subscribed and liked these videos, you've been missing this because I've been telling you this for 6 months, that the deal season would end in early 2024. This is more confirmation, because as they lower rates, what happens to buyers? Do they qualify for more?
Yes.
And if more people qualify and their payments are more affordable, what happens to demand? Does demand go up, Lynn?
It's your favorite word of it's going to be a bloodbath this spring. That's what's going to happen.
For buyers.
This spring is going to see bidding wars again. The demand will go up and more buyers will enter, which will cause prices to rise. So the I want to get a deal people, my investors, my buyers, it's go time now. This is an early indicator. The CMA or CME Fed Watch tool predicts future interest rates. Okay, you can go look this up on the magic interwebs. They are now betting by a 75% chance that we have a rate cut by March. That means as winter ends and the spring market begins, the Fed could be cutting rates.
You literally said that 2 weeks ago.
Like I said, Papa Pal. Literally, Christmas came early. I called you and I was like, Christmas came early, bro. Christmas came early. It also means that they lowered their long-term inflation targets and that they're going to hit these. It means they feel like they'll be done cutting by 2026 and that they're going to go back to somewhere around 2%. It also means to me, and this was said by Cody, that was on one of our, this was said by Tony Blodgett, who I've done a bunch of podcasts with. Tony said, you know what? The Fed was right when they said inflation is transitory. And I go, what? What are you talking about, Tony? And he goes, they were right. They just got the timeline wrong. Oh, think about that. So inflation shot way up because the supply chains got pinched, because the world got shut down. We lowered interest rates. We made everything cheaper. Oops, that caused a bunch of inflation. Oh crap, throw water on that fire, raise interest rates. But what's happening is as all of these supply chains have been catching up and labor is re-entering the workforce and immigration's coming back to the United States, we're getting that stabilized prices. We're getting inflation going down. It's not going down as fast as we want to. If you look at the CPI numbers and look at core numbers, it's not going down as fast. There's still a little bit of higher for longer. This isn't all rose, but I agree with you. I think Papa Pal did a victory lap.
Yeah, mini one. I have a question for you, Lynn. Do you have buyers from the last 12 months that have postponed their buying because of interest rates?
Absolutely.
And do you believe that a lot of those, all of them, will come back into the market if interest rates go from the almost 8s down to the 6s in the springtime or even maybe this winter?
Yeah, because their buying power is gonna go back to where it was. You know, they want to sit on the fence and think, oh, things are gonna change, and then all of a sudden, oh, well, yeah, things change. The rates did, and so you were qualified to buy 500. Now you're qualified at 450. And every other first-time home buyer in the world is, you know, in that same price range but it makes a big difference. But what people don't understand is that you're not married. And this is the thing that you see on social media. You're not married to the rate. The rate is going to change.
Date the rate.
Date the rate. You know, that's perfect for my world. Date the rate.
Oh, so don't get married again, Lynn?
Don't get married. Just date it.
The reason I ask you is I'm curious. Have you already started getting phone calls or like people messaging you yet?
I have a couple clients who have been, you know, they've been sitting on the fence, and we've tried, and they just like their buying power just went down. So, but like for me right now, you know, because I sit next to Mr. Statner a lot and I listen to him about finding the deals. And that's what I'm telling my investor friends, people who are looking for something to fix and flip. I'm not going out trying to find first-time home buyers. I'm trying to find people who are looking for a deal. Somebody that's, you know, like a house that's been listed for 100 days because their agent doesn't want to say, hey, you should drop your price. And so you just go in and you make a $50,000 less offer, or you go in and you get something in contract and then you beat them up. I shouldn't say that, but you should beat them up during the inspection. You know, there's a lot of tactics that you can use right now to get deals. And if you're not, and if your agents aren't, then, you know, you're working with the wrong people, because you got to think outside of the box.
Thank you so much. I think that's really valuable intel. I'm actually shocked that you're not getting more DMs or messages, because the time to start looking is right now.
Well, we're so far ahead of the curve.
I know, but that's when you want to be, right? Like, as a curve is like...
We're looking around the corner on the F1 racetrack right now, and we can see what's happening in the rest of the field. We're 6 months ahead of everyone. So what'll happen is late spring of 2024, everyone will start talking about this, and we'll be like, we were talking about that in 23. Here's what I said to our sales manager for RESG today. I called her this morning and I said, good morning, Jennifer. Would you like to know why Christmas came early? And she goes, absolutely. She's like, why did Christmas come early? I said, the Fed just gave us the gift of saying next year we're cutting rates, which means you can look at everyone in the room, all of our awesome, amazing people that work with us, and you can say, congratulations, you survived a recession in real estate. You're one of the war-torn veterans. 2, I need you to dig in 400% right now and take your unfair share of the market and grow with the market. 3, if you have a marginal buyer or a marginal investor, they need to go today before everyone else gets back in, because that 1% change in interest rate will increase everyone's buying power by 10%. So I said, expect transactions to go up by a good 10 to 15%. So 10 to 15% more business in real estate is going to happen in 2024 because of this lowering of interest rates. That's the immediate opportunity, just even on the agent side. On the builder side, on the developer side, cool. That means there's more buyers that can qualify. Get your permits in now. Called another one of my guys today. And I said, bro, I'm making this phone call to all of the immediate friends, the immediate homies. He said, what's up? I said, the Fed just told you it's go time. I said, remember that development project that you were talking about that you're hooning and hawing at? I was like, yeah. It's like, build it. Go now. I was like, by the time you're done, interest rates will be in the low 6s, maybe the upper 5s. You can come out with that product like we talked about. You'll kill it. Thank you, sir. Roger that. Rock and roll. Let's go. You've got to be watching this stuff. Otherwise, you miss it, though. You miss that Jerome Powell just did a victory lap and was like, you know what, guys? I think we're halfway there. One funny thing that they did say is they said, because they always leave the door open, we may hike again. No one is betting they're hiking again. Everyone's betting it's over. Could they hike again? Absolutely. But that would require some major economic catastrophe, war, or something of that nature.
Or a spike in inflation.
Or a spike in inflation. But it'd have to, at this point, be a massive spike because shelter, like we've talked about before, represents 30 to 40% of total inflation. And we know that shelter inflation, because it's calculated on a month-by-month basis over 12 months, that one of those cars is rolling off each month. So shelter gets better every month right now. And we know that food and energy has been going down, which is a big one for a lot of people. And there are some areas where we're seeing disinflation, okay, deflation, prices going down. And we know that China and Germany are exporting their deflation to us right now. China's already started to turn on their money printer to try to prop up their economy because they got hit so hard by their real estate. And so stuff's getting cheaper. Where do our cell phones come from? Where do these pens come from? Where do all our products come from?
Overseas, China.
Bingo. So it's not perfect, but this is a clear sign that real estate market will be better in 24 than it was in 23. So for our builders, our developers, our investors, our friends, it's buy time. Thanks for watching today. Hit the like button. Make sure you subscribe. Hey, YouTube recommended you watch this video right here.